on this program, we often get you the perspective of the people that manage your money. And to that end, I've got with me on today's program, Sachin Relekar, Senior Fund Manager at Axis Mutual Fund. Sachin, thanks so much for taking the time. Always a pleasure speaking with you. Now, there's quite a bit that is happening at the same time. There's geopolitics at play, and it seems like a bit of a theme in 2026. But also at the fundamental level, there are a few green shoots that seem to be visible. And beyond that, there are the threats of artificial intelligence in certain pockets. So at a first overarching level, before we get into the bottom-up approach that you might have, what are the factors that you're paying most close attention to right now?
No, certainly it's a mixed bag. Likewise, you're saying a lot of things are falling in place in terms of the macros. We have the trade deals, two important trade deals. We also have budget, which is quite showing the consistent path forward. So those are the positive signs. That's where the green shoots start coming in. But at the same time, there's a lot of uncertainty about the AI and the technology impact, which might play out for the IT services and maybe the plays based on that as well. So those are the definitely the things. But I think there are more positives, or positives outweigh some of the concerns a lot. And I think the positives are actually clearly falling in the buckets where the domestic manufacturing focus, which has been a very consistent policy for last decade or so, will actually come much more strongly from this, because now perhaps the resistance from having interlinkages to the global supply chain, etc., are not so resistant. So I think that is where the focus would lie. Also, I think the defense indigenization will come into play quite a lot. These are the things which will surely be looked at.
Okay. Now, we're just recently done with the earnings season for the third quarter. And I think a lot of people took heart, Sachin, from the fact that there is a better than expected performance, certainly in several pockets, right? And particularly at the broader end of the spectrum, you're seeing a lot of companies that have posted better than expected results, not just on the bottom line side, because you saw that in the second quarter as well, where you saw EBITDA margins improve. But on the top line, there have been signs of marked improvement. So what do you take from that earnings season, particularly when you look at the portfolio of stocks that you manage?
Certainly. So, as you also pointing out, I think the earnings season is positive. One need to keep in mind that expectations also were muted in a sense. However, the theme or the long-term outlook was always been positive. But what has happened in last year, 2025 calendar year, if you look at, especially towards the second half, the expectations were kept on coming down for various reasons. Either macro were unstable, or there was some uncertainty around how the trade deal will go through, etc. That is also there. But there was expectations which were slightly muted, I would say. But company were, I mean, what they have reported is quite steadier, and that is actually a positive surprise. And it is also positive on the top line, and also certain companies have done a good job on the profitability as well. So that is certainly the case, and it is across the portfolios. It's not or across the sectors also, not just for the portfolio holdings which we're having. So there is a positive feel about it. And now, if you see market being what it is from a forward looking point of view, I think the where the uncertainty is where some kind of a drags also been there. So result print, I would say, on the balance is quite positive, even though the expectations were muted, as I'm pointing out. But the forward outlook commentary is actually quite confident.
And so therefore, Sachin, it helps to have a fund manager like yourself explain to the investor what their return expectation benchmark should be. And particularly since we're at the start of 2026, and since you're saying that the signs are pointing to an up move, does that then translate to the portfolio level performance? Because you've seen 2025 at the start of it, because of the swirling uncertainty, and then through the year, we kept revising downwards our expectations for the year. But this time, it seems like we're past the muted phase. The question is, do we finally see that portfolio up move?
I think, look, the larger picture for India as a country, nominal GDP growth rate will still hover around 10%, which is quite a low number given how we had been for several number of years. Now, that is to do with the benign inflation as well, but at the same time, the overall real GDP growth rate is also kind of in the band only. So one has to anchor the equity outlook or equity return expectations towards that. So it's not like we are going to have a breakout year. At least that's not how we are thinking. Because at the same time, while the expectations have been got slightly beaten in the results, it's not that it was the prices were discounting a lot of pessimism over there. Prices were also I mean discounting quite a lot of optimism. So valuation wise, it is not that the market corrected a lot. And therefore, from that base, if you look at the prospective returns are not going to be breakout sort of, given that we still are talking about I mean, almost a high single digit to a 10% kind of a nominal GDP growth rate. Now, within that, then there are plays which can actually have a slight non-linearity to the growth expectations because of the policy focus, etc. But that also need to be seen in light of where the valuations are. So while last year being what it was been, because we started with a lot of expectation, but it actually didn't play out as because a lot of things actually moved quite a lot. I mean, there was a lot of uncertainty about a lot of things which I spoke about. So even here, when we're starting out, the valuation is not comforting. But otherwise, the outlook from where we are is at the margin is continually improving.
Okay, so then let me pursue that further, Sachin, and ask you from your perspective and in extension, therefore, to the investor, where are those pockets which can lead to alpha creation in 2026? And what are the opportunities and threats to that alpha generation as you see it right now?
Oh, so there are a number of larger thematics when we can look at. One is the consumer internet is getting a lot of scale in India, and I think that will be a big play. It is disrupting for certain sectors, but at the same time, it is creating a very large revenue pool, at least as of now, and it's a very large revenue pool. No denying about that. That is something to be looked at. We are keenly looking at that. Then the second point is wherever the policy focuses are. Policy focuses are going to be in the areas of manufacturing. It's not just about semiconductor ecosystem, but also the defense ecosystem. There is a lot of focus going to be there, and I think we will see a lot of increase in the private sector participation into that. Now, that is something which can be a big delta mover for the private sector companies because, as such, defense landscape is dominated by the defense PSUs largely. So, if we can find names around that, that could be another or the third important areas to look at. And then we'll also look at the consumer discretionary part. Now over there, I think a lot of these things could come through the consumer internet as well as names like automotive, etc. Because I think what we had seen is after the GST cut, while there was an initial spurt in the momentum got created, but it is also sustaining because premiumization theme is kind of got a boost through that. So these are three, four areas that definitely will be looked at. And we will see the energy transition capex because what we are talking about AI and data centers, etc. They are also quite energy intensive areas, and we will see some. I mean, we will clearly see demand improvement on that part, either the energy transition or the energy suppliers itself. Whoever plays a technology part in that value chain can actually be a focus area.
Okay, very interesting. Uh, just so that my viewer understands entirely what the thing is with regard to how Axis MF looks at its portfolios, traditionally the view had been that you had a quality bent when you looked at a portfolio construction. Has that been tweaked over the course of the last 1 year? And to put in context all of the opportunities that you have just talked about, and you've already told us what your view is on the valuation side. Yeah. How does that fit the approach that you have to portfolio construction?
We are very cognizant about valuations. I mean, that's an important discipline. While you rightly pointed out that the bent has been towards the quality and the growth focus, because that is something which creates value over a period of time. But at the same time, one needs to be disciplined about the price you're paying for the businesses which you want to own. And therefore, when we're looking at the valuation aspects or the opportunity from the investment point of view, we're also looking at the near-term valuations as well as the structural opportunity or kind of what can these businesses be over a longer period of time. If there is a transformative opportunities which can be 3x, 4x bigger from a long-term point of view, there one can tolerate certain amount of valuations, but that valuation discipline is important. That is not something which we have done in the last year itself, but that is something always been a part of the investment process.
Fantastic. Sachin, as always, pleasure speaking with you, and look forward to the next chat.
Thank you. Thank you.
All right. Well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. This is NDTV Profit.